Good evening, folks. All right, so we're looking at the dollar index as a daily chart. So we were able to get through those breakers in here, and we're making a run into this high here. Now, I mentioned last night that I'd only really be interested in seeing it trade up to the buy side liquidity and weekly inefficiency up here if we got through this high. The reason why I'm wanting to see that occur is because essentially what that would do is show a break in market structure, a much more convincing fashion relative to the daily chart. This would be a consolidation, breakdown, return to consolidation, distribution, redistribution, smart money reversal, low risk buy, and there should be another area of accumulation over here before the 97 big figure, which would give me enough range to project up into running the buy side liquidity and up into the weekly inefficiency. That's one of the things I failed to mention last night in my review of what was said, well, not last night, but on Monday's video, pardon me. And if we go into a 15-minute time frame, take a quick look at the greenback. Okay, so we're looking at the 15-minute time frame on the dollar. The order up we were talking about on Monday night, and the two breakers. We wanted to see price trade through that. We obviously see that here. Now this is the high on the daily chart that I said that I'd like to see it break through that, and then we should see it try to reach up into that equal highs or buy side liquidity pool. It doesn't have to go up to a weekly inefficiency, but I would expect if we trade through this high not to see it like do this. Okay, I don't want to see it kind of like just fall out of bed. I'm expecting it to trade through this and then continuously move higher. That would be good for the dollar, and it would make easy short selling for foreign currency. We didn't have much in the way of resistance here. We traded into it here, sold off, rallied through, found some short-term resistance there, and rolled on through and kept pressing higher. So all eyes are right here on this area up in here. This is where your next liquidity pool is, and we want to see it trade through that. We don't want to see it trade up into that level from here. We don't want to see it trade up into that 96.35, 96.40 area and reject. We don't want to see that. Now it can give a little bit of a pullback, something like this, something like that. We don't want to see it do this, okay? Because if it does this, then we're probably going to see another round of distribution. And I was wrong in my expectation of not seeing this be turtle souped. But I'd like to see it trade through it and then continuously grind higher, making a move towards the double high or equal highs on the daily chart relative to the dollar. Moving on over to euro dollar. All right, so we have a little bit of notes in here. I didn't want to move anything around. I want to keep it exactly as the chart looked when I did the recording on Twitter. I got a couple questions by way of email from some of the older members, the first group. They asked why I didn't hold the trade on, even though I gave the objective down here. You can see 1379, which is basically 100 pips. Okay, so I talked about that. Relative to the recording from non-farm payroll Friday, rolling on over into Monday. I put that on YouTube, so you know, watch that video too. You know, kind of like fill in some gaps. But this was the target, and I don't like to show my trades going all the way to that a lot on repetition in public, because there's a lot of people that are trying to go back and reverse engineer what I'm doing, and I don't like to do that. Sometimes my entries are a little fluffed for that reason, and my exits are a lot sooner than I normally would. So, or I'll take them out a little bit late, doesn't make a difference. But I try to mess it up a little bit because I don't want people basically going through how I'm trading, because how I'm executing is on Twitter and sharing on public forum. It's going to be slightly skewed to what you see. But generally, everything I tell you in terms of where I think the market's going to go, that's there. That's the premise. I teach that even on a free capacity because I want people to at least avoid trying to get hurt. Okay, I don't, well, avoid trying to get hurt, I say it that way. So let's zoom in. I want to give you a little bit more detail about what took place here. Okay, because this is some of the things you saw on the chart. And I'll have to drop down into a 5-minute chart to give you the details. Alright, so again, everything is left exactly how it was on the chart during the recording. And that's, there it is right there. Alright, so on a 5-minute basis, and it's a little busy like that. Okay, so I use 400 all the time, all year round, and because I don't like to respect the daylight savings time. So in my free tutorials, you see me go back and forth with adjusting and all that. I do that because I want to provide the choice on the part of the student. If they want to observe daylight savings time, then they know how to do it. I don't do it because there's a lot of countries around the world that don't observe daylight savings time, and to keep things simple for me, this is what I've done. I don't really change it. So that's our opening price here, 114,324 on the 5th of February. So anything from that price level or higher is ideal for shorting. You can see we came all the way up here and then fell out of bed. What I liked about this trade and why I entered in here, and this is what you're getting for mentorship level. There are a lot of you that are new and you're very, very excited, okay, and you're overzealous about what you're seeing and you're learning, and a lot of terms and a lot of things that weren't in free tutorials, and you're wanting to talk the language on Twitter to me. When you do that, you're actually sharing my content because I don't want the conceptual ideas shared publicly. Now, if I do it, it's no problem because I'm the owner of them. Okay, I'm the creator. So I don't want you, as the student, doing that. Okay, so when I talk about what I'm going to talk about right here, it's a lot of insight about something that I hinted at, but nobody really outside the mentorship really knew what I was doing. But I'm going to give you a little bit of an advanced teaching here so you guys understand a little bit more of it. A reclaimed order block, one of the highest forms of a reclaimed order block is when you see a breaker, and everyone knows that this is the breaker, and you watched me outline this during the live video where it was being recorded. Price, I expected it to shoot up here and drop down to 1380, which was also that 1379 level. Again, right here. And I had that from last Friday, not from payroll. So it was not a guess. It was not a assumption. It was exactly where I wanted to go. I said I want to see a 100-pip move. Now, did I hold the trade that long? No. This is not important. Okay, I want you and everyone else in the free public, when they see it, to see that the tools give directional bias. It gives premise and structure. When we miss the turtle soup, okay, when we miss a turtle soup, like this high here, and it runs above that, goes back above the opening price, and trades lower, back down below the old high, I'm already anticipating this as a breaker. So when it's up here, what is this low down here? It's a low resistance liquidity run. I'm expecting to see price trade down below that low. So once it trades below that low, what's it become now? That becomes a bearish breaker, or the barrier to getting back above this high. Okay, so if I am in close proximity to this last up close candle, this is a bearish breaker. If price were to come up here and we didn't have the context as we had for this run here, we could be a seller here or right below at the open. Okay, context was not supportive of that idea. we wanted to see a run on liquidity. Now you're probably going to ask me, why do you want to see that? It's New York Open, and we had equal highs in here, right in here. If you look at the high, I'm sorry, not the high, but the high, 1420, basically 1425. So the high would be essentially 1435. Okay, so 1435 would be 10 pips above that, and the high comes in on the highest candle, 1433.2. Okay, so it never got up there, but it's still nonetheless, that's what we would be expecting to see, a 10 pip run above here, not this little shallow little run. So even though we had this retracement pseudo optimal trade entry long to take us up into a run 10 pips above these equal highs, it didn't get there, and then we broke down back below this old high. When I saw that, and the fact that we went back above the opening price, I liked the idea of shorting it, and I wished I would have done it up here, but I was not in front of the screens at the time to capture it, so I waited. And what I was looking for is I wanted to see the candle right here, last up close candle. That's a bearish order block. Even though they may have sold into this here, and they can ride this out a little bit, then price comes back down, and then we give us one up close candle or an attempt to move up into it inside of this candle's range. Okay, the high and the low. I want the middle of that candle's body or mean threshold, and I anticipated that to be a reclaimed order block. Now, why is it reclaimed? Why am I calling it reclaimed there? Because it didn't do it, didn't sell off here. Because I believe that they were selling into, much like I teach, they were selling into this run. Because look how much ground they gave up once they hit the opening price and then broke market structure right here. It did not spend a lot of time here. It just went careening lower. So I wanted to be in there inside of this candle's body, preferably right around the middle of that candle. Because if I was right, we shouldn't come back up here, and it should just break down lower and run for these lows. Once it broke that, then it became textbook ICT, where everything is understandable because it's a breaker. And then we looked at equal lows and did some projections, and that's where this level here comes in at 114.05. Now that's a little bit off. I just eyeballed it real quick when I did the video because everything's happening real time. But I'm going to show you the low I was looking at and how I calibrated it to 14.05. Scrunch this up a little bit. It's not this low, it's one more over to the left. Right there. Okay, right in here. And I used 114.05 just to calibrate to the nearest 5 level. And you watched on the video that I shared on Twitter how it hit that thing beautifully. It was beautiful how it just banged right into it. And because of that run below the equal lows, it was inside an area where we'd see sell side liquidity pool. And then I expected to see the bearish breaker, which you see me draw in the video. It goes up, hits it here. Later on, hits it, and then drops down. All below this low is going to be liquidity. So what's it going to do? It's going to dig into it. We have one low. We went lower. Not a lot of rally up. Okay. Back up into that same level. 14 big figure. Equal lows. Sells off aggressively. Reaches into it. Digs in deep. Reaches into an area of institutional 113.80. That's our level that I gave on the non-farm payroll entry, London close entry, short term, one shot, one kill. That would be your 100 pips. That's what it would look like. And it gave you one opportunity here, hung around one more time, rally up a little bit more. And this is something I had in real time. I put on there, I was watching it, and I had to do other things with the mentorship administrative stuff. Spent a little bit more time there, and then finally rolled over, and then ultimately traded down into where we are here. So the idea of wanting to see what the dollar does. I wanted to see it prove to me that these two levels were not going to hold it. I wasn't sure. I was expecting to give a little bit of a sell-off, but the buy side liquidity was what I've been wanting to see. I've been wanting to see it get up in there and take that weekly inefficiency and close it in. But I don't want to go in here and trade it because I want to see this high broken rather. And if it happens, then I can be a little bit more confident. This is really, really nice. It's really efficient on the way up. So that's really nice for a price action perspective. Real quick, cable. This hammer and equal lows in here. I'll probably see it try to run down a little bit more tonight. Remember, we have that bank rate tomorrow for GBP. One quick thing I just want to toss out. We have a market maker buy model. Consolidation, breakdown, distribution, redistribution, smart money reversal, low risk buy, reaccumulation, more reaccumulation in here, and I think we'll probably want these equal highs. So that's something you guys can study, watch that going forward from where we're at now. We might want to come back down here and trade into this breaker here. Hit that, maybe find some support. It doesn't have to. It's actually better if it just keeps on rolling, but you would use a small 15-minute or 5-minute fair value gap to test some entries inside of a kill zone and then see if you can get that run up into these equal highs. That's how you can practice with that. And that's going to be it, folks. I will talk to you guys by way of Twitter tomorrow, and I'll give you a review for the week on Friday night. Until I talk to you then, I wish you good luck and good trading.